Welcome to the DebtCircle Key Roundups. I am Vijendra.
And I am Leela.
On today's episode, we'll be discussing major developments in the debt markets, including banking, corporate borrowing, and regulatory changes.
Absolutely, Vijendra. We'll cover Bandhan Bank's provisioning impact, rising bond yields, pyramid technoplast strategy, and key moves by RBI and corporates shaping the debt ecosystem.
Bandhan Bank faces a one-time provisioning impact of 1,250 crore rupees due to RBI's expected credit loss framework, with phased implementation starting April 2027 and full adoption by 2031. Despite this, the bank posted strong quarterly profit growth of 534 crore rupees, up 68% year-on-year.
The impact appears manageable, with annual provisioning estimated at 250 to 300 crore rupees over 4 to 5 years. Deposit quality is improving too, with CASA rising to 29%, helping margins expand to 6.2%, alongside expected loan growth of 11 to 12% and deposit growth of around 10%.
Corporate borrowing costs in India are rising again due to West Asia tensions impacting oil prices. Institutions like SIDBI raised only 3,025 crore rupees against 6,000 crore rupees target at 7.61%, while NABARD also fell short, raising 4,250 crore rupees versus 7,000 crore rupees.
This reflects market caution. April bond issuances dropped to 17,644 crore rupees from March's 53,946 crore rupees, with 10-year government security yields rising to 6.98%. Investors are becoming selective, slowing overall bond market activity.
Pyramid Technoplast plans to increase its borrowing limit from 300 crore rupees to 500 crore rupees and also raise its asset disposal ceiling to 500 crore rupees, enabling flexible funding via loans, bonds, and asset monetization.
This dual strategy improves liquidity and balance sheet strength, giving the company flexibility to fund expansion and respond quickly to market opportunities.
Kotak Mahindra Bank redeemed 151.05 crore rupees in bonds, including principal and interest, reflecting strong liquidity. It maintains solid capital adequacy with a CET1 ratio of 21.1%.
Despite past regulatory issues, this disciplined repayment and strong ratings from CRISIL and S&P reinforce investor confidence compared to peers like HDFC Bank and ICICI Bank.
RBI has launched Mission Saksham, targeting 1.4 crore participants in urban cooperative banks to enhance governance, compliance, and operational strength.
With multilingual training and hybrid learning formats, this initiative aims to strengthen institutional resilience and long-term stability in the cooperative banking sector.
RBI's shift to the expected credit loss model marks a major change. Banks must now provision proactively based on risk instead of waiting for defaults.
This will tighten lending standards, increase scrutiny on borrowers, and potentially raise borrowing costs while improving long-term financial system resilience.
Saman Capital is repurchasing NCDs after a rating upgrade to AA+, aiming to reduce borrowing costs and optimize its liability profile.
Backed by strong investor support and improved ratings, this move enhances profitability and positions the company for better access to long-term funding.
Menon Bearings maintains stable ratings with solid financials supported by diversification into EV components and expansion initiatives.
However, risks remain from automotive demand cycles, raw material volatility, and forex fluctuations, making margin sustainability crucial.
India's microfinance sector has shown recovery, growing 5.3% sequentially to 3.39 lakh crore rupees, with delinquency rates improving to 2.3%.
While this indicates stabilization, lenders must remain cautious of fintech-driven over-indebtedness risks and maintain disciplined lending practices.
Mantra Capital secured a BB+ rating for 75 crore rupees debt, improving its credibility in MSME financing despite moderate credit risk.
Continued performance, transparency, and rating stability will be critical for maintaining investor confidence and avoiding volatility.
Mindspace REIT acquired a 51% stake in International Tech Park Chennai, reflecting strong institutional interest in commercial real estate.
Meanwhile, Energy Infrastructure Trust retained AAA ratings, Philatex is increasing foreign investment limits, and RBI is expected to hold rates steady while managing fiscal and external risks.
Overall, from regulatory reforms and rising yields to corporate strategies and sector recoveries, India's debt markets are evolving rapidly, making risk management, discipline, and strategic flexibility more important than ever.